Why don't we start with the big market story this morning? NVIDIA shares moving higher again on that news that they can sell their H20 chips in China. What does that say to you about the broader tech sector, the fact that we're seeing other chip stocks move higher on that news as well?
Well, I mean, I think it says that we have more room to run on this trade, on the AI trade overall, but probably still actually a little bit more on the semiconductor trade, more than we actually thought that we were going to coming in this morning before this announcement. We thought we were going to be moving on towards more of a broadening of the AI theme, but we may get a resurgence of more of the infrastructure part of the AI theme here for a little bit.
Yeah, we had to hit on that again. NVIDIA, the biggest leader in the S&P in the pre-market, shares up about 4.5% right now. I want to go back to that B of A survey very quick, noting that sentiment's getting a bit toppy, but people have a bit more appetite for risk. How do you see that playing out?
Well, I mean, sentiment getting toppy is interesting, though, Frank, because sentiment was really bombed out as recently as about 2 months ago. So it is rising pretty quickly. It's risen, especially on the professional investor side, but it was rising from a really low starting point there. I mean, people were really pessimistic on the professional investment side here about 2 months ago. So it's probably just a recognition of the fact that we are getting some trade. We're going to probably start getting some trade deals here pretty soon. It looks like there's room for negotiation. Trump opening up these chips to China is showing that he wants to even deal with China, and he's continuing to talk to Europe and everybody else. And so it's like as we progress along through this, through some of these themes that were holding investors back here for a while, including like we're going to get the big beautiful bill passed, are we going to get trade deals? These things were really kind of holding us back. We're getting some of that stuff resolved, and so just a kind of normalization of investor sentiment is probably a normal reaction to something like that.
And what I thought was pretty interesting in that survey is that the fund survey report says that they see investors kind of rotating sectors. So we know that industrials are the leading sector. The industrials seem to be feeding off some of that tech optimism and AI optimism as kind of the picks and shovels play when it comes to there. Do you see people rotating away from industrials, and where do you see that money going?
Well, we see probably a little bit more broadly than industrials. We see people actually probably starting to rotate a little bit into infrastructure plays, Frank. The infrastructure play is not just sort of your mom and dad's infrastructure plays. This is going to be kind of AI delivery infrastructure plays that, in terms of power generation, power delivery, everything that goes into making AI one of the central themes of the economy for the next 25 years, much as, the internet PC boom was has been the central theme of the economy in the U.S. For the previous 25 years. That movement into sectors of the economy that can really take advantage of that theme, as we think is going to be the kind of the future story.
B of A survey showing a lot of optimism. Can I bounce something else off of you that came from Morgan Stanley Wealth yesterday? It's a bit long, but just bear with me because I want to see if you have a take on any part of this because it hits on a number of things. This is from Lisa Shallett from Morgan Stanley Wealth. They say they see the S&P 500 gains beyond the 6,500 to 6,600 range as difficult to achieve. They also say they're unconvinced the dollar weakness is purely benign, given amplifications of tariff impacts. You were just talking about tariffs. And then furthermore, they say they're skeptical that the tax code changes net pay-fors are stimulative enough to prompt the new investment boom, and also say operating margins may be elusive as accounting mechanics, demand destruction, tariff absorption, and commodity gains thwart upside earnings surprises. As we go into earnings season in full swing with the banks today, any of those points, did any of those stick out in your mind as possible headwinds to the markets moving higher?
I mean, how long you got, Frank? That is. There's a lot to unpack in there. I disagree with almost every word of that. To be perfectly frank. As far as the dollar goes, the dollar is facing some modest headwinds, but it's nothing, it's nothing, disastrous. The margin story, I think I couldn't disagree with more sharply. The margin story is really driven by productivity gains, and productivity gains is driven by tech. And we're still in the cusp of one of the biggest tech booms that we've seen in the last generation. And so, that we think is complete folly. And as far as like generating gains past 6,500, 6,600, it's something that we can probably sustain. I mean, I don't think we're going to have a 25 or 30% year here in the United States, but this is also going to be a negative 10% year. So I just think it's really, we should be really careful to get too bearish as we're coming into this earnings season. As we're going to start hearing from some of the banks this morning, and we're going to get a clue as to what the consumer is really actually doing, what our businesses are really doing with this added certainty that we've gotten from the passage of the big beautiful bill, and some of the reduction in tariff headlines that we've gotten.